Everybody, thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to go over our watch list for the week ahead. This watch list includes names like Tesla, Shopify, Apple, Google, and Microsoft. We're going to give you all the resistance and support points as well as the strategies that we plan on taking on all these stocks so you know where to take profits, where to enter, and where to cut losses if necessary. So let's go ahead and get started by first talking about SPY. We're going to do so on the macro level chart, which means we're going to do it on the daily candles just to see where the overall picture is. And then we're going to zoom into the micro charts so we know where the overall short-term trend is currently lying. So right now on the daily candles, we can see that SPY has been fighting to stay above its 10 and 20-day moving averages. During our rally that started in the end of March, that lasted all the way until the middle of April, we can see that we held the 10-day moving average, which is this blue line, throughout the entire rally. Now, of course, every rally, at some point, people are going to want to take profits, and they do so during times of uncertainty. Obviously, in the last couple weeks or the last 4 or 5 weeks, we saw earnings, we saw updates from the Federal Reserve. So we've seen so many headwinds and things unfold, and the banking crisis as well, that people started taking profits. Now, when we saw people take profits, they brought it down to just above 400, but they managed to bounce twice. So you can see we created this double bottom pattern here right around 403, and then we bounced right back. We did so here on the 26th of April, and we did so again last week to end the week after Apple reported its earnings. So now if you're looking on the daily candles and you're watching SPY and you're wondering, is it going to be a bullish day or a bearish day? You have to figure out where SPY is trending above or below the 10 and 20-day moving averages. So as of Friday, SPY is trending above the 10 and 20-day moving averages. So going into this week, you're going to want it to open above those levels in order for it to continue its rally up. Now remember, our rally that started in March and ended towards the end of April did take us from 390 all the way to 416. So a period of consolidation or cooling down is definitely necessary before we can gear up and push again, especially because we are right at the resistance that we got rejected at strongly last time in the beginning of February. So obviously, when we got rejected around 418, we got sold off all the way to 380. So 418 is a very, very strong resistance. We did test it last week, but we got rejected. This week, as things cool off, we don't have as many important headlines coming our way. Most of earnings are already reported. The big tech stocks already reported, and they did not disappoint. Actually, Microsoft and other companies hit a 52-week high after their earnings. So they did not disappoint. Therefore, we expect the market to continue going. But before it can continue going, here are some resistance points to focus on. So if you are a bullish trader on SPY, your ultimate resistance to break is going to be 417.62. Where did we get that level? This is simply the level that we got rejected at last week on Monday. We can see that on Monday we got rejected and we sold off all the way to 403.75, which makes 403.75 a very critical support, which is all the way down here at 403.75. But before we get down to 403.75 or up to 417.62, we have some levels to break above. So 414 is a place in which we got rejected at on the 3rd of May, which is Wednesday last week. We can see that on that rejection, which was the day that the Federal Reserve decided to raise interest rates by 25 basis points. Now remember, folks, this was already expected, so the market had already been pricing it in, which is why the market was able to recover so quickly back up, and we closed just below that level on Friday, which means that going into this week, 414 is going to be the very first resistance to focus on. If we break above 414, then we can move to 416, and then we can test 417.62. But ultimately, we're going to need to break above 418, which was the level we got rejected at back in February. We can see that we got rejected right here at 418.35 and started selling off. So above 416.62, look out for 418.35. If we move above that level, then we are for sure going to 420 plus. Now, we do expect that the moment we break 420, the market is going to have a very strong upside rally because then it will cause a short squeeze. A short squeeze is pretty much when people are betting against the market and then the market breaks out above a very significant resistance, therefore causing everybody shorting the stock or the SPY in this case, to get out. So they have to buy back their positions and it will boost our prices up. This is what a short squeeze looks like when we rally. And this is because people are buying and people are buying back to close their short positions. Now, moving on from SPY, of course, if SPY pushes, we know that the market will follow. But moving on from SPY, we have some stocks that we're watching that are likely going to follow SPY up or down, or they may lead SPY up or down. Last week, we saw Microsoft leading the market, so did Apple, and that's the exact reason why SPY was able to maintain and reverse so quickly back above that 403 level. So SPY reversed and it brought back all these large cap tech stocks, which gives us a very nice and clean watch list to go into this week. Now, before we dive into our watch list, we do have to address the fact that we are expecting the CPI and PPI reports this week. That's the Consumer Price Index and the Producer Price Index. Both of those reports will update us on inflation. So for the last 6 months or 7 months or so, inflation has been trending down, which is a great sign. It means that the Federal Reserve's plan of action of raising interest rates and tightening money policy is working. However, we need to see inflation continue that downtrend in order for us to comfortably invest in the market, in order for the markets to comfortably go up. Now, we do expect inflation to come around expectations or maybe slightly below expectations, which is a good sign. If that is the case, and if CPI comes in line, then we expect the market to continue pushing. Now, of course, on the day that the CPI is released, there will be some volatility, so make sure you plan for that and make sure you strategize and position accordingly. You don't want to be over leveraged when the CPI report is expected the next day, especially because those reports come out before market open. So if you're swinging a stock into a CPI report, the market is going to already know the details of the CPI before it opens. Therefore, it can gap down or gap up. So make sure you're positioning carefully and you're giving yourself at least 2 to 3 weeks out on those contracts if you're trading options, so you can guard yourself against a sudden drop or a sudden push. Now, let's get started with our watch list. So our watch list is comprised of these stocks here, and we're going to start from the bottom up. We're going to start with Microsoft for very obvious reasons. If you're not watching Microsoft right now, then you probably don't understand what's happening in the market. And that's simply because Microsoft's large gap up on earnings is likely going to continue its push up. Now, what do we know about earnings gap ups? Earnings gap ups are actually part of our most utilized strategy, which is taught in our course. So if you haven't taken our course, make sure you go to the bio. We're going to leave a link there, and this will teach you all about our earnings plays, which are very, very profitable strategies. Now, in this case, we have Meta as an example. We can see that Meta gapped up on earnings. This was on their last earnings, not this one, but the one previous to it. And we can see that after their gap up, the stock continued to rise all throughout the quarter for the next 3 months. This is what we're expecting to happen from Microsoft. Microsoft's gap up on their last earnings took them above their 52-week highs, which means this is the highest they have traded in over a year. Surprising, right? Especially in a time in which there's a recession and a bear market, which is why we always tell you, don't trust the media, don't trust the news, just look at the charts and they'll tell you what you need to know. The market has not made a lower low in all of 2023. We can see that we bottomed out at 348 in last year, and since then we have been making higher highs and higher lows, leading to what potentially could be an end-of-year rally for the market in 2023. So, looking at Microsoft, the stock that just made a 52-week high, we can see that Microsoft gapped up and it never moved back to fill that gap, which is exactly what we look for in that strategy. When a stock gaps up on earnings and it holds that level and continues to consolidate, then it could mean that the stock is ready to go higher. And it did so on Friday. We can see that Microsoft reached a high of nearly 312 before getting rejected back down to end the day, which is normal because people were just taking profits before the weekend starts. Now let's take a look at Microsoft to talk about some levels that we're focused on. So if you are trading Microsoft, you're going to need Microsoft to break above 312 in order for it to move towards a price target of 314 to 315. However, Microsoft is considered bullish even below 312. Anywhere above 308, we consider Microsoft to be in the most bullish range possible. And That means if you are entering the stock or if you're looking to get into the stock, you want to get in as close to 308 as possible, and then you want to use a stop loss just below 308. Now, we won't short the stock or play any puts on the stock unless it breaks below 302, and that's because that is a very significant support for the stock. If it breaks below 302, it means it broke below its consolidation range that it created right here. You can see that here, buyers refuse to give it up. So if they give up 302, it means the stock is likely going to fall towards 296 as people take profits into this support. So if we break this support, we will fall towards this support here where we bounce. If we break 312, we will move towards 314 to 315. Now, if you enter at 308 and you really want to play it safe, you can enter at 308, place your stop loss just below, and then you're going to take the first half of your profits at 311 to 312, which is going to be ultimately a resistance because that's where we got rejected to end last week. And then you can choose to hold the other half of your position for a potential breakout towards 314 to 315, and then you take profits on the remainder of your position. So very, very clean chart. We love what we love what it's doing, and it has a very clear bullish flag that it's breaking out of. Now, Google is the second stock on our watch list. Google has been on our watch list for about 3 to 4 weeks now, which just goes to show how long a stock can stay in one place before it really gives you that move. But the longer that consolidation is, the bigger the move will be. Now, we don't know if that move will be up or down. We are leaning more bullish just because of the overall market conditions, but we don't know if that move will be up or down just yet. Therefore, we have created some levels to trade on Google. Now, because we are leaning more bullish than bearish, we have already started a call position in our group. We have a group called the Hyper Chat or the Hyper Team. We already started a Google call position, and if you are interested in seeing what that looks like or joining that group, we'll also leave a 7-day trial in the bio. You can just sign up and check it out for yourself. But we're already in Google calls. What we're looking for here is a breakout above 109.20 in order for us to move to our first price target of 112. But keep in mind that 112 is just a very modest price target, and that's because Google has been consolidating in this range for 3 to 4 weeks. So when it finally gives us that move, we are expecting the stock to rally much higher. Therefore, our price target to take profits is going to be between 116 to 117, and our second price target is going to be around 120 to 122. Now, 120 to 122 is a very optimistic price target. So if you are aiming for that point, make sure you're giving yourself at least 2 to 3 weeks on calls if you are looking to take option contracts, or if you're looking to take shares, just be patient with your shares and eventually it'll get there. Google is going to jump to 120 to 122 eventually. So if you're doing shares, you just buy and hold and you'll be all right. Now, if Google fails and it breaks below 103, then it can fall towards 99.70. Remember that psychological supports are our exact numbers. So 100 is a strong psychological support for many traders. If we break below that level, then many traders are likely to head for the door and we will fall towards 96, and it will be very hard for Google to recover back above 100 if that is the case, at least in the short term. Now, the next stock on our watch list is a familiar favorite. This is Apple. Apple, once again, puts the entire market on its back and it rescues the market last week. The market was on the verge of selling off. Apple reports better than expected earnings, and there you have it. Apple gaps up and it's nearing its 52-week highs of 176. So if you are trading Apple or if you are looking at Apple, then here are some levels that you need to focus on in order for you to trade it properly. Apple is obviously already in a bullish trend. The stock has been in a bullish trend since the start of 2023. It went from a low of 124 to a high now of around 174. So if you are looking at the short-term charts on Apple, you know that the stock is already bullish and it's likely going to continue, but it does need some time to consolidate and cool down before it continues, which is why we're going to give our calls at least 2 to 3 weeks as well. Now, Apple gapped up on earnings and its low of the gap up was around 170. Therefore, 170 to 175 is going to be a critical support of ours. However, we are considering the stock bullish as long as it stays above 172. So if you're looking for entry, try to get in around 172 and place your stop loss just below 170.75. We will not short the stock or play puts on the stock unless it breaks below 167. Anywhere above 167, the stock can very much just come back and reverse right back up. So we won't short or play puts on it until it breaks 167. Otherwise, we are bullish on the stock. The first resistance to focus on for our breakout is going to be 174.30. If the stock can break that level, then it can move to a price target of around 176.15. Now, where did we get this price target? This was the last rejection that the stock had before it sold off for multiple months. You can see that the stock got rejected in August of 2022, and it continued selling off for the months to come. Therefore, that's going to be our first resistance and focus after the 174.30 breakout. Where did we get 174.30? That was the point in which we got rejected at on Friday. Now, remember, we said it's normal for the end of day to get rejected on Friday because many people are taking profits before the weekend. But if we come into this week and if we break that level, then we are expecting to move towards that 176 mark. Next stock on our watch list is going to be Shopify. Now, Shopify broke all barriers last week. I mean, what a stock. And congratulations if you got in on this, because this is a massive move. This was an expected move as well. So, if you have FOMO about missing out on this one, you definitely have a right to, because Shopify has been consolidating and trending to move up. Volume has been accumulating and the stock has been dying to make this move for a long time, and it finally did so on better than expected earnings. Now, here are some levels to focus on for Shopify. Keep in mind that the stock has already rallied for a couple days, so it may need some time to cool down, but we're still going to try our best to trade the stock this week. So what are we looking for here? Shopify's next resistance is going to be 62.60, and that's because that's where it got rejected at on Friday. But we're not looking for entry around 62.60. We're actually looking for entry around 59 to 61. If the stock can give us that pullback, then we will start a very small position and add to it if things look right. So if we get in around 60, we see that volume is accumulating, buyers are taking more power than the bears, then we will enter more of the position and we will ride it towards 62.60 as our first price target. And if it breaks above that level, then our next price target is going to be anywhere between 64.50 to 66.50. Now, something about Shopify is it has tremendous relative strength right now. And if you see the stock market come down this week and Shopify manages to hold the 60 support, that means this stock is getting ready to move in the following weeks. It could just be consolidating this week and it's getting ready to move in the following weeks, which just goes back to our advice about make sure you give yourself 2 to 3 weeks on those contracts, especially because this week is CPI week, which means there could be low volatility in the market. Now, moving on to our last stock, which is probably the one you've all been waiting for, is Tesla. Tesla finally broke its multi-week consolidation last week. You can see that the stock has been consolidating below that 165 mark for about 10 days, as long as our history shows here, and it has been above 160 for about 5 days. So the stock has been consolidating. It's been dying to make a move, and last week it finally made a move after they announced that they are going to be raising the prices on their Model 3 Teslas in China. So they raised prices, which alleviated investors. Remember that investors were very unhappy after Tesla reported their last earnings because their price cuts hurt their business and their underlying performance. So now that the stock or the company raised prices again, we automatically saw that fully translate into the stock's movement. Because remember, markets are forward looking. They don't care about what happened. They care about what's going to happen. So if your forward guidance, or if a company reports higher guidance or projections, or they raise prices, then that automatically brings attention from the buyers, because they know that their next quarter or the next 2 quarters are going to be bullish rather than bearish. So here in this case, we see Tesla broke above that 165 resistance and it rallied towards 170.80, which is going to be our first resistance in focus. So if you are looking at Tesla and you need a breakout point, look for a move above 170.80. If you need a stop loss or a support point, your first support in focus is going to be 167.50, If it moves below that level, then Tesla can move back to 165. Now, we don't want it to move below 165 because remember, this is the point that the stock had trouble getting out of. And so if you see buyers taking profits and they move it back below 165, that means they're no longer interested in the stock and it will fail back towards the 162 support. So make sure you have a very firm stop loss just below the 165 mark if you are entering bullish calls or if you are entering a bullish position in general. Above 170.80, Tesla is likely going to move towards 174 to 176 as the first price target. So make sure you have plans to take profits around 174 to 176. And if you see strong momentum carrying out in the stock, you can hold it longer. But just keep in mind that Friday's upside move was nearly vertical. So it's unlikely that the stock will have 2 to 3 back-to-back vertical days before a strong pullback back down towards 165 to 166 to retest that level before it continues its rally up. Anyways, you guys, I hope you guys found this helpful. I try to make it as clear and concise as possible. Please don't forget to subscribe and like, and thank you so much for checking in. Best of luck.